Well, Davide, thank you very much for joining us at IMpower FundForum. Over 2 decades of conferences on public funds and asset management in Europe. Very successful one. Glad to have you for the first time here. Davide is one of the real entrepreneurs in financial service. He launched his own business in 2006 when he was just 36 and is now a powerhouse in financial credit and expanding overall in financial asset classes. Presence UK, Europe, Asia and America, about 20 billion under management. Thank you very much and congratulations for the outstanding results to date. First question I have for you. We have seen the American banking crisis in the winter. Are European banks safe?
Thank you, Massimo, and thanks for the opportunity. So I think the answer is European banks are safe, and the reason is because they have applied the regulation that the US have applied to the top 20 banks, and they did not make the mistake that was done under Donald Trump leadership to basically give a free pass to banks below $250 billion of assets. So the long and the short is European banks are safe. Why? They kept the rules that are applied to JP Morgan to any bank in Europe basically above $10 billion of assets.
Credit Suisse collapsed. A big opportunity for UBS to reinforce its position. Was the Swiss situation a one-off and unique situation versus the European Union banks?
Absolutely. So first of all, Switzerland is not part of the EU, and Switzerland is regulated by FINMA and the Swiss National Bank, and not by the ECB nor the SSM. So basically completely different markets, geographically similar, but not the same. And Credit Suisse was a basket case. For 10 years, never earned any money. They paid themselves $30 billion in bonuses, and every time they asked money to shareholders. Till when eventually shareholders said, enough. And then the institution basically de facto failed. UBS made the best deal ever in history. If you think about it, it took basically 170 years for UBS to build a capital position of 70 billion. And during one weekend, they end up increasing that capital by more than $45 billion. So they basically made 100-year history of profit over one weekend. So well done to UBS. We think it's one of the best deals that's ever happened, and UBS shareholders will greatly benefit over time of it.
Out of what we've seen in February in the US and in Switzerland during the winter, do you see any change in the regulatory framework of the banking system?
I think on this one, I'm aligned to what Jean-Laurent Bonnafé of BNP said, and even Jamie Dimon. So the rules were there. Had they been applied, there would have been no issue. So in the banks in which the rules were applied and followed, there was no issue. Of course, if you set up rules and then no one follows it, then there is a problem. So the problem was in the US of supervision. It was not a regulatory issue. If you have a rule, just follow it. Of course, if you give exception to anyone, then that's a problem. But it's not the problem of the rules, it's a problem that you actually don't enforce them. So I don't think we need re-regulation. It would be a big mistake. It just apply the one we have. Why? Because where they were applied, they absolutely worked. And I think Europe and UK and Canada and so anywhere else, it's a classic example of why the regulatory framework we have, it's perfect, just needs to be implemented and executed and respected.
Algebris has been a pioneer in AT1s investing. You have been into that sector of industry since it was created. Today you have some security issued, the perennial, issued by Deutsche Bank yielding 10%, Intesa yielding 8.75%, super prime European banks that have a huge spread vis-a-vis the treasuries. Do you find that justified, and do you find that an interesting investment opportunity still today?
Thank you, Massimo. The answer is yes, I do. And you need to think about TLAC, Emerald Capital, so anything that is above equity in global SIFI, global systemically important financial institution, so the top 70 most important banks in the world, and below senior debt, so basically our own money in current accounts. That space is now about $4 trillion. So it's a huge market. It's about 5 to 6% of global credit and global bonds. The junior part of it, additional tier one or pref in America, yields anywhere between 5 and 600 basis points above 5-year treasury. So it's massive spread. And the reason why I find this super attractive is ultimately you are, from the financial point of view, $20 billion senior to the equity of Morgan Stanley, HSBC, BNP, Deutsche Bank, and Intesa. So you are super safe vis-a-vis first-class institution, and you get paid an equity-like return, so LIBOR plus 6%, so right now yielding 9 to 10% in dollar, on the highest quality names in the world. That's why I think it's a unique risk-reward. On top of it, let's be clear, financials suffer for the last 10 years because rates were very low, and rates is the margin of the financial. And right now, with inflation and having rates certainly slightly higher for a longer period of time, financials gonna enjoy very good profitability for the coming years.
Moving on from AT1s that have been the basis for the build-up of your firm, where are you expanding now, and where do you see the institutional investment or the private banking investment opportunity looking forward over the next 5 years?
So Algebris, it's an income firm. So basically, anything we do needs to have an income aspect. And how we generate income is through the knowledge of the balance sheet of the largest global financial institution around the world. So whether it's equity, senior bond, tier 2, AT1, preferred, we basically look in the world for anything that yields between 7 and 10%, hopefully safe. And in financial is available because one, we had the Lehman event. Secondly, we had SVB. Third, we had Credit Suisse. So it's not the market for tourists. For example, the reason why we exist is because over the last 10 years, we have outperformed by 3 to 400 basis points, indices in ETF constantly. Why? Because from time to time they had zero. For example, Credit Suisse was 7% of the ETF. So if you had an ETF, you lost 7%, you're not making it back. And hence, thanks to this, we can deliver real alpha and performance. And so anything that has an income-related angle where we can have an expertise, we keep on developing. And so basically our expertise is financials, equity and credit, then real assets Italy, NPL, private equity, and small cap.
Davide, thank you very much. Congratulations for your business, and thank you for being with us today.
Thank you, Massimo, and thanks to you.